We set up Tahi 4 years ago in order to help redirect some of Kiwi's savings into Kiwi businesses, to help them stay Kiwi on. A lot of it was to do with our own experiences as a startup in New Zealand. Like most startups, you rely on friends and families, and you can grow to a certain stage through the help of people that you know. If you're successful, you'll get to a certain stage where you really need more capital to grow. Some of that you can get from the banks, but by and large, the banks will only lend you more money if you have equity in your business. Beyond a certain size, typically for businesses, once you get up to about $10, $20 million in size, the availability of capital becomes a significant constraint. If you look at how successful KiwiSaver has been, we're rapidly coming up to $100 billion in funds under management. Very little of that money, if any, is actually invested into Kiwi businesses that are not listed on the New Zealand Stock Exchange. That's the large majority of New Zealand businesses. So what we are trying to do, as a facilitator of economic growth in this country by, appropriately allocating capital to different sectors and different businesses, we certainly felt that we could play a role in helping smaller Kiwi companies grow their business, without an over-reliance on the banks, trying to keep the business under the control of the entrepreneur shareholders. The Tahi Fund has now got approximately $100 million invested in 4 years. We certainly recognise that that's only a tiny drop in the ocean in terms of the requirements of New Zealand businesses. We want to sort of grow the fund incrementally at the same pace as we find suitable investments. In our business, we tend not to think in terms of destination. We tend to think in terms of the journey. We don't have specific goals in mind in terms of how large the fund will be. I think we want to make sure that at every step along the way, we're doing things that are true to our goals, which is helping Kiwi invest their money into Kiwi businesses, to stay Kiwi on.
Well, the first thing we really look for is an operating partner. We can provide a number of things, including good strategic insight and capital, but we can't be in the businesses day to day, so we need a really strong operating partner that shares the same values as Booster and its investors. The other critical area that we look for is we're looking for companies that have some kind of competitive advantage that can be sustained in the long term. And then it comes down to the economics, that we can get the required return that we need for the risk profile that is acceptable to our investors.
In the direct investment space, Tahi is, I think, different to many, if not most of its competitors. We focus on generally mid-scale businesses. So we're talking about investments where we're usually writing checks for a stake of the business, where we're in 3 to 15 million, maybe 20 million, something like this. But I think probably the most differentiating factor is the fact that when we go into a business, we are looking and expecting that we're going to be there for 20, 30, 50 years.
And what we're looking to do is find companies that we can continue to deploy more capital and time, because as New Zealand's savings grow, we need to continue to find good investments to put that capital. Apart from being our first, it's also been a demonstration of a roll-up strategy where we've been able to identify an industry which we think is interesting. Partly we're geographically diversified, so we're active in 60 markets. The company has a full value chain operation, so we're able to do contract winemaking, we're able to produce and vinify and process wine, and we can sell that at a bulk level, but we also then have branded bottle sales as well. Well, it's actually a design manufacturing company. It just happens to be involved in the motorsport industry. Their competitive advantage is that they have been able to produce products through time, over a 20-year period nearly, where a lot of world records have been set using their gear. Our vision is to continue to expand both the product set and the markets internationally for Dodson, and to continue to build a quality engineering business and, in time, also integrate into its supply chain.
Sunchaser has a very unique position in the market. It produces avocados essentially out of season. It's the very first orchard which produces nationally. For the last 4 and 5 years, we've begun harvesting in May, so our avocados hit a market that is calling out for them, and that impacts price. It's a high revenue model, and that derives from its unique window. Looking at the future for Sunchaser, I think it's more of the same. It is around about a 100-hectare orchard sitting on around 140 hectares of land, but only about 60 to 65 hectares were anything close to mature at the time of investment. So within itself, about 1/3 of it is still to come to full production, so it's not yet producing at its full capacity. We certainly aspire to continue to increase production per hectare, and more particularly to try and achieve a smoother production profile from year to year. Darling Group represents a really important channel to market. So they are involved end to end, from growing, managing orchards, growing fruit, packing fruit, cool store, logistics, all the way through to end consumers. Its revenues are roughly split half between New Zealand and half in Australia. It's a truly family-owned business, or has been until now. Andrew Darling and his wife Jo and his family all work in the business, and they'd reached a point where they were ready to go to the next stage, but needed capital to do so. The future for Darling Group is really quite bright. The vision, I think, has always been that this business has the capacity to be bigger in scope and scale. More outlets, more supply, more post-harvest activities, more infrastructure, and critically adding a third and fourth pillar to the existing products. Lifetime is a step into a new sector for us, although of course it's a sector which is familiar to us in the savings industry. It has a long-term proven track record. They serve more than 40,000 customer groups and families. The company's vision is to continue doing what it's doing, that is providing advice to Kiwis through their lifetime. And the biggest drive at the moment is to provide the same advice that it's able to provide to its highest value customers down to its smaller customers, where the cost to serve is growing because of regulation. And so Lifetime's opportunity is to become the leader in servicing those customers.
The Tahi Fund is an open-ended investment structure, which means we have about 6 or so investments at the moment. And over time that will grow in terms of quantum, diversification across sectors within the New Zealand market, and that also means that investors, like a unit holder or a shareholder, will get a share in the portfolio as it grows.